Hi, and welcome to today's coronavirus freight market update. I'm Kevin Hill, filling in for Tim Dooner today.
You are, and I'm Mike Vincent, standing in for myself.
Very good.
Yeah.
And so basically today our market experts are going to guide you through the coronavirus crisis, market demand, consumer spending. We're going to have a huge section on the initial jobless claims that came out today.
Yeah, we have Andrew Cox and Anthony Smith are going to join us.
Andrew Cox and Anthony Smith,
Yeah.
They're going to prolong or go on a sequel, I guess, from their Freightonomics podcast and discuss these historic numbers that came in this morning at 8:30 a.m. Eastern Standard Time at just under, I believe, just under 3.3 million initial jobless claims for the week. So that's huge news. So we'll be tackling that, and then after that, we will have a Skype call with our founder and CEO here at FreightWaves, Craig Fuller, and then we'll talk about trucking demand, supply, what's going on in the markets, short haul, medium haul, long haul markets that are trending right now. What's a special? What are you seeing in Sonar right now?
In the freight markets?
In the freight markets.
So
today.
A couple days ago, it seems like we hit our peak, and volumes are starting to descend. Not incredibly drastically yet. You know, they're still at historic highs. But they're coming down. So the rejection rates and the strain on capacity is certainly still there, but the trending is coming down.
That's mostly with short haul and medium haul.
Well,
lanes,
I was just going to say the thing is that long haul, the long, which is 750 or 800 miles and more, is actually still trending up. Slightly over the last few days. It is not coming down. It is flattening for sure, but it is still trending up. But anything less is dropping, and particularly when you get into local and the short, they've been taking a nosedive. Local's been taking a nosedive for 3 days.
Yeah, definitely.
Although still historically high, their trend is way
trending
down.
Right now.
So I'm sure Craig will have some insight on that. I'd really love to hear what he has to say about that.
Yeah, definitely. So that'll be coming out here in about half an hour. We'll join that call. And we'll just run down the news, the top headlines on FreightWaves for today and see what is happening. So basically, our first story that we have up on FreightWaves.com right now is John Gallagher reports on the state driver licensing agreements. And this is on the shutdown of state driver licensing agencies, or SDLAs, in response to the coronavirus virus. And this is choking off the pipeline of new drivers for both emergency transportation and for the country's longer-term economic recovery, according to the Commercial Vehicle Training Association, or the CVTA. And the guidance released last week by the U.S. Department of Homeland Security declaring transportation workers part of the critical workforce in the COVID-19 response included those who support necessary credentialing, vetting, and licensing operations for transportation workers. That wording should not leave any question, according to the CVTA. The state and county agencies issuing commercial learner's permits and commercial driver's license are part of that workforce. But even though the FMCSA has urged governors to keep these licensing agencies open, they do not have the force of law. And that's according to the CVTA President Don Lefebvre from the CVTA. What do you think about that?
Shortage of drivers, and then those that are coming through the schools, not schools shutting down, or are they losing capacity? Is this what they're telling us? It's just tightening it, or is it shutting it down completely?
Well, so basically these agencies that do the permits and the learning, basically, I think there's 27 states right now where the governors have basically done stay-at-home policies, right? So they've shut down any non-essential agencies. Now, is this an essential agency? Is it not? Or is this particular office in the agency, is it essential or not? And it might vary state by state, and it looks like the federal government really doesn't have the authority to order these offices to remain open.
Right, and hard to do that from home, right? Work from home and
it is.
and train somebody to get a CDL, right?
Exactly right.
So, I mean, I guess you got simulators, but you can't. That's not going to work, right?
You can't do that. So that's going to be on pause for a great swath of the country right now. Is that these agencies and these licensing and permit type of government agencies will be shut down, so it could drain a little bit of the capacity out of the market.
Yeah, at a time right now where even though volumes are coming down, and maybe when volumes come down, then that eases the strain on the capacity and some opportunities for those that as we crash down, it would be repurposed into some of these areas that could be really affected. The really essential CDL drivers, right? I mean, could do that, but right now, rejections are high. That strain on capacity is still very, very high. Now, when that crash comes, which is not good news to see a crash in the economy and OTRI really come down to historical lows is probably what will happen, and possibly drivers being laid off, et cetera, and being repurposed. We don't really want to see that, but that could ease that strain, I suppose, if you take it to its ridiculous conclusion.
It could, and it really depends on how long these agencies are shut down. Right. So if it's a 3-4 weeks, it's probably not going to have that big of an impact. If it's longer, then who knows? Yeah,
exactly. So in other news, Kim Wills reports on the Port of Savannah. So despite the challenges, the Port of Savannah achieved its busiest February last month, handling 364,405 TEUs, or 20-foot equivalent units, an increase of 17% over the same month last year. So year over year for the month, up 17%. It's business as usual at Georgia's port, but with an isolate and operate strategy. So the strategy includes spreading out workers at the 1,300-acre Garden City terminal in Savannah to minimize the risk of exposure to the coronavirus, obviously. Georgia Ports Authority Executive Director Lynch said. Now, GPA, or Georgia Ports Authority, operates deepwater ports in Savannah and Brunswick, as well as inland terminals in Chatsworth, Georgia, Bainbridge, and Columbus, all those in Georgia. Operationally, we are redesigning staffing and procedures, such as assigning operators to specific cranes and having them report directly to that machinery. I guess skipping pre-meetings, I would guess. Lynch said in a posted update on the coronavirus crisis, as a preventative measure, GPA is providing disinfectants to equipment operators who have been instructed to wipe down their controls at the beginning and end of each shift. March volumes year over year are expected to dip because of the impact of the COVID-19. But GPA said earlier in the month that it already could see brighter days ahead. Bookings on the water show a strong increase, which is an important indicator for a return to normalcy, the Georgia Port Authority said. So that last statement there, a comment on that, watching that in sonar, there's definitely upticks in exports to the United States as we monitor the ports from origin. So on the water, I would tend to, we can corroborate that statement there. We're seeing that in sonar, watching that very, very closely to see what is going on there, as that eventually does hit the ports and then affects, surface transportation, both intermodal and over-the-road trucks. So that's interesting. And we also had, I was reading the changes in the shift notifications to the vessels and carriers in Long Beach in L.A., right? So they changed their hours of operating at the different terminals to allow for this disinfecting between shifts. Which is smart.
Definitely. So it's good news that those port volumes remain strong. And basically that they have policies in place to disinfect and have a safe workplace. We do have a couple questions right now on LinkedIn. We're live on LinkedIn. So if you have any questions, please send that to us. And the first one's from Harsha Relocations. So basically, what would be the future business of the relocations industry? So I think that probably has to do with moving. Household moving or corporate movings, right?
Yeah, internationally and domestically, I imagine. Yeah, it's a huge business. So I would say that it's got to be hurting right now.
It does. Basically, we talked about it a little bit. The real estate market, buying or selling a home has to be quite challenging right now. And thinking about relocating, whether you're individual, corporate relocation right now, except for moving everyone to home or remotely, is pretty well off the table right now.
I would think so, and I really think that if you play this out, I mean, it's all part of the economy and moving and relocation of individuals and companies as well. Obviously, it's part of the supply chain, it's part of the economy, and so on and so forth. And we've always talked about this isn't a singular event that hit everybody at one time. Right? It's going through its time trial. So I would say that the recovery in this particular industry of relocation is going to depend on, because it's international and domestic. So how things change domestically and then between country and country, not a V-shape recovery or a U, kind of a sound wave type of effect, right? According to where you're at.
It really does. It really, it's all about timing and basically cases, which we'll get to the cases, today's count pretty soon here. But we have another question from LinkedIn. So
we do.
This is from Robert Kilhefner, and he's a career truck driver, Lyft driver. And do you think demand will go up across the board as manufacturers ramp up production in response to the virus in the next week or two?
Demand for his particular trade? Is he a Lyft truck driver? Is that what he's saying?
Well, he's a professional truck driver, so I don't know.
Okay.
Basically, auto manufacturing plants, a lot of people are taking 2 weeks. You're closing for 2 weeks. Now, whether
that's
demand for those
let's close
products,
for 2 weeks and see what's going on in 2 weeks, right?
Exactly right.
I mean, it's kind of like that we hope to have everything back online by Easter, and so do I. I hope we're back online tomorrow. I hope we'll wake up tomorrow and, hey, it's over. But, I mean, it remains to be seen. Yeah, when we recover, the demand will be there. How quickly that comes back.
How quickly that comes back
is the question.
And are we going to repurpose some of the manufacturing facilities for ventilators and emergency supplies?
That's a good point.
Will there be demand there? But,
right. So bringing back those employees from the shutdown auto manufacturers that repurpose and retool, I would guess
as you said,
it's
going to be a sound wave recovery, right? It's not going to be V-shaped, so that demand, that natural demand of, say, auto parts or car manufacturers is going to take a little while to ramp up again.
Yeah, and so one country recovers and gets back to work and goes on, their demand comes, and so demand for manufacturing and where that is sourced obviously would grow, and then exports and imports in that company, and then the sound wave.
Yeah. We have one more question, and then we'll bring in Andrew Cox and Anthony Smith here to talk about unemployment. And this is from Tom Smiley. And it's a sales question, which is always good, right?
Yeah.
So what is your advice for sales reps right now who have their goals? What is your advice for sales reps right now who have their goals, yet are hearing more no's than ever?
So my personal advice right now is okay. So I'm kind of transitioning from enterprise sales into these new roles and stuff, and as I've worn many hats here, but personally, it is you're now in the long sell, right? There are people out there that you're going to be able to sell to that hopefully need your product now more than ever. Right, and I mean we're certainly in that situation here at FreightWaves, where the data that we give is essential to understand what's happening on a daily basis. But make yourself a solution. Where is your product actually align with what is going on right now, and how can it solve issues, and maybe the issues that are going on right now? But you're hearing those no's, but tactfully keep the conversations going. And don't just write them off, because they could be customers, and they probably are potential customers when this settles down. So be empathetic, be the helpful person, be the information giver, and you play the long sell.
Yeah, definitely. It's all about discovery time. It's all really about persistence, and this is where you have to have that mental fortitude to be persistent, be as persistent as ever, really, because it is going to be a rough environment. There's going to be a lot of no's, but you just have to keep grinding it out. This is when when that grinder mentality really comes to the forefront, and as you said, Michael, is to always be in discovery mode and in the long sell.
Yeah, absolutely.
Definitely. So really quickly on the numbers, on Tuesday, the U.S. coronavirus case count was 43,734. Today's number, as we went to air, was 68,814. Deaths on Tuesday were 533, and they've basically doubled to 1,037 as of this morning. So
scary numbers.
So
scary numbers.
Scary numbers, definitely. With that, we have our market experts, Anthony Smith, our lead economist, and Andrew Cox, here to talk about these historical jobless claims. So so Anthony and Andrew, what jumps out the most to you?
Hey, Kevin. Great to be here. Great to be chatting with you guys. Yeah, so the latest weekly jobless claims number, one of the biggest headline items for the week, which is saying a lot, showed that there was an increase of nearly 3 million for the week. So this is something that's been a drastic change and shift and the landscape for consumers throughout the country. Andrew, there's a lot going on.
Yeah, there is, Anthony. I mean, this is literally telling us that in the last week, the week that ended Saturday the 21st, that at least 3 million Americans were laid off from their jobs and then applied for unemployment benefits. You know, this is a labor market that has kept the economy humming for the last decade. It pushed us through the European debt crisis, the Japanese tsunamis, Chinese slowdown, through everything, and then just in a matter of days, just stopped.
Yeah, and the thing is, it went from record 50-year lows, historic lows, to something literally off the charts here that we have displayed here in our Sonar platform. The other thing is the most recent spike that we saw, the closest spike that we've seen wasn't since 1982. I think it was a spike of around 700,000. So this is truly unprecedented. One of the other big areas that kind of dominated some of the headlines yesterday was news of a stimulus package being passed through finally.
Yeah, they've, we're almost there. I think it will be signed into law probably by the end of the week. I'm just a little bit worried about the time that it took to get this bill passed. You know, there's probably going to take at least that much time to implement as well. So I don't think this is as high as this number goes. I think it goes much higher in the coming weeks. I think that there's a time lag there where people are still going to have to make really difficult decisions about who they're going to keep on and who they're going to furlough or lay off in the next couple weeks.
Yeah, speaking of the difficultness of it all, the sudden rise is going to be a lot of difficulties for many states throughout the country. We're looking at processing these jobless claims. I'm sure there's already been difficulties. I've heard there's been shutdowns of different computers, things like that. Also, regulations being reduced to allow people to apply a lot sooner than typical, just because there's been such an influx in jobless claims. Speaking on stimulus, I can only imagine this first pass of the stimulus bill really being an initial stimulus package. There's no way I really see this being something to really hold over the amount of unemployment that we're about to see coming down the line for the duration of the coronavirus. So I wouldn't be surprised if we see talks of another stimulus package coming up here in the next few weeks.
I agree with you, Anthony. And a lot of it's going to depend on how quickly we can wrangle in this virus and get it contained. It's likely going to be several months, even a couple quarters from now, where we get it completely contained. So yeah, we're likely looking at a complete economic shutdown almost for many industries for multiple months here. I don't think we'll be open by Easter or even maybe the end of April. I think this is going to be prolonged, and I think we're likely going to be looking at a similar scenario where they're trying to get more money into the pockets of consumers here in a couple months.
Right, and so as you mentioned, a lot of industries being affected. Consumer facing, of course, hospitality, service side segments, things like that, but also manufacturing, I think, is going to be one that's going to be hit pretty hard. I think we saw the latest industrial production numbers that we have up here. February, almost like a cruel joke, saw a tick up in February. I think it was a 0.5% gain. Of course, February is such a long time ago, but something that we're not really considering to be exactly booming in the coming weeks.
Yeah, Anthony, it's both the supply and the demand side. So supply side, a lot of these factories are simply shut down where people are forced to be in shelter-at-home ordinances, and then on the demand side as well, you have just nobody buying big-ticket items in manufacturing. Think about automobiles or big durable goods. These are things that people are going to be pushing off at least for a few months, if not for a couple years now. They're not thinking about making these big purchases. They're worried about where the next paycheck is going to come from or where they're going to get the next meal. This is industrial production is going to be way down.
Exactly right. A lot of purchases. Speaking on some of those purchases, I have up here non-defense capital goods new orders here and the yellow line. So non-defense capital goods new orders really indicative of business-to-business activity. And so we saw in the latest number through February that there was a dip down. So Andrew, February already businesses were feeling a little bit indecisive about making investments. This is a little bit of a holdover from the tariff wars that seemed such a long time ago. So this is only going to amplify things as business feel a little bit more hesitant to make purchases. So already feeling hesitant, this is something that's going to be amplified likely in the coming months as well that we're going to keep our eye on.
Right, just think about it. They're having to make decisions whether to keep people on the payroll. You know, they're certainly going to be pushing back decisions to buy new goods, to invest in their businesses. These are all things that just conversations they're not willing to have right now.
Right, and so when we're looking at the consumer side of things and the manufacturing side of things, definitely both going to be impactful for flatbed. We're looking at potentially reduction in housing starts right now. We're looking at reduction in manufacturing capital goods. These are all things that really rely on flatbed trailer transportation. So really going to be a difficult time for those flatbed trailers potentially. Again, these numbers for industrial production and non-defense capital goods, a lot of them are through February. March numbers are actually a little bit more representative of what we're going through right now. Of course, there's a regional Fed indexes that are for different regions. So we have Empire State, Philly, Dallas. So up here we have the New York Empire State general business conditions. And we see that it went from a 12.9 down to a negative 21.5. So Andrew, this is another diffusion index, many components to it, but anything below zero is really indicative of contraction for these businesses. Of course, New York going to be one of the hardest hit states in the country.
Right. I mean, New York is the epicenter of this. It has, something like 20 or 30% of the cases. The entire city is pretty much shut down. I know the services portion of this was even lower. That everything in New York is going to be shut down. I think we see this number go even lower as time goes through when we get the April number in.
Right. And again, another one we have here is the Philly Fed Index, just to show it's really going to be nationwide. Of course, different segments of the economy and different regions of the economy are going to be impacted a little bit more than others. But this just goes to show that the most recent numbers through March for businesses on the manufacturing side and on the consumer side, both definitely being negatively impacted by the coronavirus.
Good stuff, guys. So we had the 3.3 million, and Andrew, you were saying you see this going on for a number of months going forward. So is this, 30%, 33% unemployment by June, which would be, 700 bips above the Great Depression? You see that happening, or what's your thoughts on that?
I don't see us getting all the way up to 30%. We'll have Anthony chime in here in a moment. I think we're looking, I did this on the deep dive last weekend. I estimated that the hardest hit industries, let's think about retail and food only, for example, that equates to about 30 million people. If half of those people end up getting laid off, which I do believe we're well on our way to that point, we're looking somewhere around like a 15 to 16% peak unemployment rate. So I don't think we get to 30, but the shock and awe of the quick expansion of unemployment and the quick contraction is going to be damaging to the U.S. psyche. So we're not going to get to 30, but it is going to be damaging. What do you think, Anthony?
Exactly. I think 30, 20, definitely on the higher end of the estimate there, but I think we're definitely going to see substantial unemployment rates, definitely double digits most likely. The thing is that we've heard from the Federal Reserve Chair, Jerome Powell, that in the near term there's going to be a lot of damage, a lot of hurt, especially on the consumers that are in these industries, as you mentioned, those service-facing industries. We're thinking of retail, hospitality, restaurants. There's going to be a lot of near-term ramifications. But the other thing he wants us to keep in mind is that there is going to be a rapid return to a lot of these businesses once we get on the other side. Biggest thing right now is going to be containing the virus. And once I think we're on the other side, there's an expectation that there's going to be a pretty rapid ramp up when we get to the employment side of things.
Yeah, I'm expecting a rapid ramp up, but I do think that the expansion, the re-expansion will be slower than the contraction just because of how quickly this thing has happened. I mean, literally in 1 week we had 3 million Americans lose their jobs.
Right.
So I mean, it's unfair to think that in 1 week 3 million Americans can get their jobs back. But I do agree with you that we'll have a pretty gradual and quick ramp up after we contain this virus, if we do.
Right, and then one of the longer lasting things that there could be is a psyche of it all. Our consumers going to feel confident enough to reduce their social distancing measures throughout this whole time.
Right.
So I have a quick follow-up question about these numbers this week and going into next week, and then next Friday is the March jobs report, I believe, the first Friday in April. And I apologize, my sound went out if you covered this before, but what are the predictions for the March unemployment numbers that come out next Friday?
Sure. So I haven't seen the latest reports for the updated jobless claim. I'm sorry, not the updated, the unemployment rate. But I've seen anywhere from expectedly 5 to anywhere from 10%. So there's a wide range from many reputable institutions. So that's going to be something to definitely keep an eye on. Job openings is going to be another one that we expect to be pretty diminished in the coming weeks. I think that's coming out here shortly when we're looking at the amount of job openings. That was already an area that was diminishing before this entire corona ramp up, the coronavirus outbreak. And so both job openings and unemployment rates expected to see anywhere from 5 to upwards of near 10%.
Yeah, we had 5.7 million unemployed persons as of February. So if you add that 3 million that applied for unemployment benefits, we get up to nearly 8 or 9 million unemployed Americans. So yeah, I think we'll see unemployment rate. I mean, it could possibly double by the time March comes around.
Thank you.
Go ahead.
Thank you guys for that great analysis. We'll see what the number is next week and see if your predictions or your forecasts are accurate for the unemployment numbers that come out in March. Definitely. And we have a comment here from Tom Smiley again. Basically, I think there will be overall changes that people make about how they go about their lives. I think this panic will help people plan better for the future. So I tend to agree with that. I think this is going to have long-lasting effects on our society and our culture.
I think it definitely will, and I think it's both from a way you do business and the way you act socially with people, and hopefully for the better. There's a lot of good things that can come out of this.
Yeah, there definitely is. So again, thank you guys for that analysis, and let's hit another headline or two while we wait on our Skype call.
Very cool. I can go here. Eric Kulish reports on the $2 trillion rescue bill. The U.S. Senate late Wednesday passed a $2 trillion coronavirus rescue bill that includes almost $60 billion in aid for the airline industry, including all cargo carriers, and $10 billion for airports, primarily to preserve jobs until the economic activity returns to normal. The money comes with strings attached, though, and it should, really, but not as many as the Democrats originally thought or sought for. But the most important help is in the form of $32 billion in direct grants to be used exclusively for keeping payroll intact as of March 24th. Split $25 billion and $4 billion for passenger and cargo carriers, respectively, plus $3 billion for contractors that perform catering, ground handling, and other services. Companies don't have to pay back the money as long as they don't make layoffs or cuts benefits through September 30th. Airlines also may not buy back stock or pay dividends until after September 2021. And the Department of Transportation is authorized to force carriers to maintain all the services that they were scheduled to provide as of March 1st through 2022. The money for individual carriers will be portioned based on the wages paid for the April-September period last year.
It's confusing, right? It's the airline bailouts, so there's a lot of equity and debt involved. Yeah. And I did hear on the news last night that I think it was yesterday. Yesterday, about 280,000 passengers flew on domestic flights in the U.S., which is normally about 2.8 million. So it's about a 90% free fall. But we have Craig on the phone right now, the founder and CEO of FreightWaves, and hopefully we get him passed through here right now. There he is. I see him. How are you doing today?
Oh, yeah, I see him on the monitor.
I'm doing great. It's first time we've had sunny skies since we've been in quarantine here. So it is nice to get out and walk around and not feel contained in your house.
It is. It's a beautiful day all over Chattanooga. It's great.
Yeah, try and relieve some of that cabin fever, some of that quarantine fever, I guess, as you call it, isolation.
Yeah, it's we live here on the mountain, so we get the chance to walk around and check out the wildlife up here, and it's starting to return. We're starting to see signs of spring, but the downside is we have a lot of trees and vegetation around here that are blooming. So as my allergies act up, I just start to wonder if I'm having other conditions. This COVID thing starts to play with your head a lot.
Yeah, every cough or sniffle or slight itch in the ear, and you're like, uh-oh.
Well, the good news is what I've read is that sneezing is not a COVID sign.
Right.
And I typically, that's what happens with my allergies.
So every time you cough, just sneeze and you're okay.
There you go. So lots happening in freight, guys, and I know that really enjoy tuning in on the show that you guys are doing here. This is a really interesting time for the market. The jobless claims were not really a surprise. I think just seeing it real in the paint is real. Makes it more. Gives it more definition, but in reality, jobless claims, these numbers have been expected and called for over a week.
I think that's what you see in the market today too. The market's up, the stock market, right? And I think it was all baked in the cake, and that's what we're seeing. It is a very scary graph, though. When you think about, we're already, this number is at least 4 times the number at the height of the Great Recession a dozen years ago.
Yeah, I mean, look, certainly the severity of the drop-off or the severity of the cuts is, obviously significant. In fact, when we talk about economic forecast, we've not, even during the Great Depression, you're not, if some of the forecasts are come out to be true, which the St. Louis Federal Reserve is projecting a 50% reduction or potentially 50% reduction in GDP in the second quarter. That is deeper than the deepest part of the Great Depression. Now, here's the thing: is that took 3 years to manifest itself during the Depression, where we're talking about it taking place over the course of months. And so it is quite different. The good news is this bill, this massive spending bill, and I was actually had the desire for some reason to read it last night, and I got away about halfway through it before my head started to hurt. But the thing is, the government's pumping so much money through our economy that there's going to be a lot of relief coming, and it's going to put so much money into play once we get through this virus that it's going to have a pretty profound impact on not only the freight markets but the overall economic picture.
So you think that stimulus, Greg? I think you're kind of implying, maybe or not, but what I'm reading is that this stimulus package would help when we get to the backside, kind of sharpen that recovery a little bit better than just a U shape. You think that's possible?
It's so massive. The amount of, we're talking about a $2 trillion stimulus package for small businesses, and even as it applies for companies like FreightWaves, as I understand it, of course, I'm not a lawyer, and some of the reading the language it's not the most exciting reading, but my understanding is as long as you maintain your employment, you have under 500 employees, and you maintain your employment that you had a year ago, so basically whatever you had in terms of Q2 employees of 2019, what you have this year in 2020 in Q2, as long as you maintain those employment levels, then you basically get a loan from the government that you don't have to pay back, which is pretty profound. It's basically a massive incentive, and it's going to be a lot to small businesses. It's interesting because as we think about freight, talking to some of the asset-based carriers that are out there, some of the larger folks, businesses, have sort of talked about in Q2, there may be a lot of smaller trucking companies and mid-sized trucking companies that go by the wayside, or potentially brokerages that end up consolidating, and we've seen a lot of layoffs there. This may change that picture. If the bill does get passed by the House, remember you have another step, and there will be some changes adopted by the House. Usually the House is good at putting in a lot of pork. Remember, it's a Republican. You have Republican Democrats. This has come out of the Senate. Now you have both sides, but they're going to put their own level of pork in there. And so what we're going to see is a couple of small modifications, but if it stays, and it is likely to stay mostly intact, if it does stay intact, then I think we'll see a situation where the amount of dollars that are coming into the market are pretty profound. And I don't think we'll see, my projections before this bill is that we're going to see a substantial amount of truckload asset-based bankruptcies because those businesses wouldn't survive a significant downturn if we lose 40% of our freight volume or whatever. With this bill and the potential for these asset-based operators to essentially borrow money without any recourse, as long as they maintain their employment levels, then we may see a situation where we don't have significant amount of bankruptcies as what we had previously projected. That's good for the overall state of the market. Maybe some of the larger carriers, which we're hoping for a capacity crunch, they're not going to see that. We're going to see it a little bit this sort of elongated in terms of capacity.
So Craig, what is the stimulus bill that just passed? What does that mean for near-term and medium-term trucking volumes? We saw where it's likely peaked for at least this cycle. Do we see another uptick coming up out of this?
I think my thoughts are, and this is, there's a lot of arguments here. There's a lot of different points of view. Morgan Stanley came out a couple of days ago and talked about the fact that, trucking is not as exposed to a downturn because parts of the economy that are being impacted are not heavily weighted towards truck. I don't know that I agree with all of that. Ravi Shankar, the analyst, is a really smart and thoughtful guy with lots of information, but his view is more bullish than even Bob Costello, which tends to be a persistent bull in the market, is more negative. And ATBS, Todd Amon at American Tax Business Services, or Truck Business Services in Denver, ATBS, had basically talked about the fact that he's also projecting a pretty sizable drop-off. My own instincts tell me that we're going to see a pretty significant drop-off short term. So as we think about April, my internal projections is our OTVI index, which is outbound tender volume, is going to drop below 9,000. And that's equivalent to about what we saw during Labor Day of 2018. I don't think, even though 40% of the freight market traditional volumes have dropped off, I think a grocery, consumer packaged goods is going to be a lot more demand than in a normal cycle. So we'll see some of that volume stay persistent, but I think we're going to see a pretty sizable drop-off in April that's going to feel like a holiday weekend for a lot of carriers, and they may go on for a few weeks. Now, here's the upside to that. Once we get through this, and I actually don't think we're going to get through it. My personal opinion is it's going to get worse in April than better. I think we may be through this through the end of May and into June, if not later. Once we're through this situation, then all of those companies are going to come back. They're not going to come back at once. It's going to sputter, but different parts of the supply chain are going to come back. And you got to remember, those companies are going to be ordering inventory to build products and start to rebuild. And we may see some surge where companies are sort of responding to the impact of when they were shut down and have backfill of orders they need to fulfill. So when we get into the later portions of Q2 and into Q3, especially with all this money pumping in, and we're talking not just the fiscal stimulus, the $2 trillion, we're also talking about the Fed stimulus, which some folks have estimated at $4 trillion. We're talking $6 trillion of capital coming into our economy. We're going to see a situation, and we're not talking about just the United States. I mean, globally, this is happening all over. Central banks are pumping a ton of money. They're going to use both fiscal and monetary stimulus. We're going to see a really, really hot market, I think, in Q3 and Q4. So I'm pretty bullish about the latter half of this year because effectively trucking is very correlated to GDP. So I think you have to be bearish about the next couple of months. You have to look at this and say volumes are going to get really soft. But if you survive the next couple of months, you have a ton of stuff to look forward in Q3 and Q4.
So one part of the market that's pretty hot and basically it goes with the narrative is final mile. And one of our listeners, Patrick Murray from On Time Logistics, he's a final mile delivery scheduler. He says, on my side, we're seeing 40% year-to-date growth, which still keeps us at 30% year-over-year. Not quite sure what the last part is, but it's still a strong business on final mile deliveries.
I mean, it makes sense. I mean, basically, I think we're going to see, and you guys have talked a little bit about, does this permanently change behavior? I mean, ultimately, we're eventually going to go back to having concerts and events. Maybe not as much, and maybe it takes a while to recover, but eventually these things recover. If you sort of look at the SARS epidemic that happened in 2003, we saw Asia for about 12 to 18 months, went through a pretty big downturn, and then sort of things restored. And, they have hundreds of thousands of people that go to these trade shows over in China and concerts and stuff. They eventually return. That will happen. But what I think does change is that consumer behavior as it relates to getting comfortable buying things online is just going to be exponentially impacted. And so last mile delivery has been a constant sort of growing exponentially for the last couple of years. It's just going to become that much more important. People are going to realize they don't, there's this creep factor or Cody factor with COVID is, you think about going to buy a car or going to, sit in a piece of furniture. The whole germ factor is going to be realistic with us for a while. And we may even see generational shift in how people think about germs. And so I think the need to go test a piece of furniture or buy a big box product going into retail may change. That behavior has been shifting for the last couple of years, but I think we'll see it be more expeditiously. That curve will continue to increase.
Very good. Very good. On basically, let's look at the long haul trucking, because that still hasn't peaked, right, Michael?
I haven't seen so long haul is the one that is still on a slight uptick. Everything short of the long haul has been dropping, hit that peak, and kind of looking at why is that going on. Do you have any thoughts on that, Craig? Why long haul has not peaked quite yet? I mean, it is flattening, but it's still on the uptick, even though it started really with the local started dropping a few days ago, and now everything else has followed suit except for long haul at this particular moment.
Yeah, I mean, long haul is there's a lot of correlation with imports. I've seen China come back in. You got to remember, once the boxes hit the ports, they're while they are handled with fulfillment centers and DCs, that it doesn't. You're not talking about the kind of manufacturing and those elements. So I think long haul is much tighter correlated with trade, particularly global trade, and we're starting to see the Asian markets come back, and that's having an impact in the long haul markets. And frankly, there's just the types of products that move in the long haul market are different than the types of products that you see through local and regional DCs and fulfillment centers. So if you think about it in sort of these regional freight movements, you see stuff coming out of DCs, a lot of DC to store fulfillment, and manufacturers get, particularly in the auto sector and other sort of large manufacturing, scale manufacturing, they have their suppliers in sort of these near areas, and so they're bringing products. But what you see with the long haul market is much tighter correlation to imports and export activity, and China and Asia is starting to come back online, starting to rebuild sort of the demand and push product off of their coast, and so it doesn't have as much domestic impact as what you would expect. And so I'm not surprised that long haul has been a bit more persistent and probably will be more persistent right now. The other thing about long haul is remember that produce and agricultural products move heavily through those long haul markets. When you're talking about things like lettuce and produce out of certain parts of the country. So that volume will still stay persistent, whether it's running on reefers or not. It's still a factor in how we move goods.
Great. Craig, we have another listener question here, and this is from Jared Taylor. And he asks, will we see further broker consolidation for small and mid-sized brokerage in this environment?
Jared, I think that's certainly we're going to see a lot of consolidation. That consolidation's been started for the last couple of years. I mean, we saw it in 2018. with big transactions done. I mean, Global Trans got traded twice within the last 24 months. We've seen companies like Load Delivered out of Chicago that got acquired. Transportation Insights, it was a transaction. Transplace a couple years back got acquired. So we're going to see a lot of that transaction consolidation happen. I think we're stuck with it, or it's going to be a consistent thing. I think what's different about now than we were a couple of years ago is valuations are starting to come and compress. And so the valuations of getting 12 to say 17 times EBITDA is probably a thing of the past. And now what we're going to see is a survival of the fittest. In 18 and early 19, there was still a lot of volume in the market for brokerage freight and spot freight. And as that dried up, companies that were reliant upon customer relationships and basically that traditional sales brokerage model, a lot of that volume started to dry up, and so companies have started to lay off because a lot of the spot volumes dried up. And you think about what's happening right now, the types of products that are moving, Procter & Gamble, Unilever, Nestle, grocery, all these companies are moving a lot of freight, but they don't rely upon brokers as much as other types of freight movement. So because of that, a lot of the volume that the brokerage community has traditionally seen, it has dried up because other types of manufacturing and parts of the supply chain are not pumping volumes, particularly in the small and medium-sized business sector. And because of that, you're seeing a lot of these brokerage offices lay off. Now, the two things that have happened is one is compression of margins. As spot rates have come up against that contract rate, we're seeing margins compress. And then we're seeing at the same time volumes start to slow down. So there's certainly a lot of pressure, and that's going to create a lot of economic issues for freight brokers.
And it definitely has already. We did see, we have it out on FreightWaves.com. JP Hampstead wrote up an article, and we were seeing some brokerages still raising money. So basically, $10 million was raised by Forager Logistics.
Yeah, but you got Forager, and I had the opportunity, which is going to be published tomorrow on Fuller Speed Ahead. I actually had the chance to sit down with Matt Silver yesterday and talk to him about the raise. Forager's got a different model. It's cross-border. He's trying to, if you think about moving freight across borders, particularly with all of the stuff that's happening and the complexities of it, there's a lot of hands or different parties that are involved in it, whether it's customs brokerages or the drayage carriers that go across the border or the interline carriers that go between the countries. A lot of that, Forager's got a very niched and specialized product offering, which is why they're an attractive investment compared to the traditional high volume brokerage that we saw in 15, 16 sort of get funded. I think we've sort of seen the end of, my assessment is we're not going to see another Convoy pop up where it's chasing high volume, frequent sort of movement in dense lanes with dense volume shippers. That's probably a thing of the past. The nice thing for Convoy is they built enough sufficient scale, and they are the leader, or between them and Uber, are the leader of the digital upstarts. And therefore, they're probably going to have a pretty insulated market with not a lot of direct competition coming from new venture capital funded businesses, because that whole model of funding a brokerage that you're effectively funding and acquiring volume is probably a thing of the past. And Convoy is starting to shift more into technology enablement and density in their networks, and think of themselves more of a virtual trucking company, more like a virtual Landstar, more so than a brokerage. And I think it's going to be difficult for anyone to come in and be another Convoy. I mean, the thing about venture capital, having raised venture capital and talked to a lot of investors, is they don't want to invest in the second player, particularly in a market. They want to invest. Everybody wants to be invested in the one player. Now, that doesn't mean that they won't invest in a second player. We saw it with Uber and Lyft and some other companies in these sectors. But typically, if you're not number one or number two, the ability to raise capital is de minimis. Now, what we do see and it's going to be interesting to watch. As companies, J.B. Hunt is the biggest of this, which is a traditional freight company, traditional surface trucking company, and intermodal company that has created J.B. Hunt 360, which is arguably, from the last data that we tracked, the largest digital broker in the market. And they're complemented through J.B. Hunt's infrastructure, both final mile, the intermodal business, over the road, dedicated, all that. They have this massive infrastructure. And I think what we're going to see is other players, traditional asset-based carriers, are going to roll out very similar solutions. And I know there's some that we're actually planning to announce at FreightWaves Live Virtual coming up on May 5th through 7th. I mean, there's a number of these asset-based carriers that are rolling out digitally enabled solutions. And so I think that's where we're going to see some of the more digital upstarts come from, some of the traditional players. It's going to be an interesting time to watch. I do think consolidation is a factor, but I don't think we're going to see I don't think we see a next generational Arrive Logistics or a Molo that comes out of nowhere and gets to $100 million and within 2 years. I think those days are behind us.
Yeah, definitely agree. I definitely agree on those ramping up and buying market share. Thank you very much for your time today, Craig. It was great speaking with you. And again, FreightWaves Live at Home is May 5th.
Yeah, FreightWaves Live at Home. And I want to do a shout out. Ron Klein, who's actually served under the Obama administration as the Ebola czar, and had dealt with the Ebola outbreak, and is likely going to be a part of, whether you like it or not, is probably going to be involved in politics even in this next cycle. Ron's going to talk about sort of the state of what's happening with the outbreak, the impact on supply chains, and we're very excited to have Ron Klein attend FreightWaves Live Virtual. Again, it is a virtual event. It's free and open to everybody. It's going to be broadcast on FreightWaves TV. You don't have to have tickets. It's free. And we're going to have both demos and a lot of awesome fireside chats available, both live as well as downloadable or streamed after the fact. So it's going to be a really exciting time. We've never hosted a virtual event of this scale. But the thing that people don't realize, Kevin and Michael, is just how big the audience of FreightWaves TV is. We're getting 35,000 people a day that tune into FreightWaves TV for more than 30 minutes a day. Think about that in audience and how big that is. That's equivalent to ESPNU, the university ESPN, their cable network. So if we were a cable network, the FreightWaves TV would be in the top 100. And I'm really proud of the work that Emily, Jonathan, and all of the support staff are doing. And you guys are doing a fabulous job, Michael and Kevin, hosting this really important coronavirus update.
Thank you very much.
Thank you very much, Craig.
Thank you. Be great.
See you guys. Be well.
Thank you. Peace and love.
Peace and love. All right. So that was a great interview. Founder and CEO of FreightWaves.
Very insightful.
Very insightful.
I've known him for close to 20 years now, and when he speaks, I listen. I always learn something.
And that segues into your 4 o'clock show today, right?
It does.
It is at 4 o'clock, right?
It is.
4 o'clock show, freight forecasting.
Freight forecasting, right. And we're going to, so Zach is the Sultan of Sonar, Zachary Strickland, will be with me again today. And we're going to go through, we'll show how to do some charting of the OTVI, OTRI, et cetera, or the outbound tender volumes. And we're going to break down those lengths of haul and kind of discuss that. But also how to look at, okay, where is the next emerging market? How do I place my assets? Where do I go to help my customers if I'm a provider like an intermediary, et cetera? Where is the next crunch going to come in the capacity? Because it's changing. You see this LA came down, now it's coming back up. Well, how are imports affecting that? How is manufacturing affecting that? Rail, et cetera. So we're gonna look through that stuff today.
It's interesting because China is basically up to full capacity almost in manufacturing and ports, but then again, demand certainly for department stores, for big
but that's the
box,
issue. They're up and running, but there's nobody demanding
there's no
it, right?
Demand.
But
they're cutting orders. There's installing orders. So how's that going to affect, especially LA and Savannah as well?
And you got to get into the international as well as what are the carriers and the vessels doing with there's some ports arguing 14-day at sea before you can call on our port, especially if you come from a coronavirus stricken area, which it's hard to find one. So how is that happening, right? I mean, how does that play out?
Very good. And then yesterday we did put that coffee down, where we talked about kind of going off one of the questions that we had earlier on there's a lot of no's out in the market. So how do you identify when deals are heating up and when they're cooling off? So basically one of the good indicators on the cooling off is when people ghost you, right?
Yeah.
Deals are, and then great buying questions for the deals are heating up, and we're calling it know when to hold them and know when to fold them.
Yeah. Will there be another cameo by myself on that show?
No, that was the week before. so it was very good. And then next week, next Wednesday, we are going to be joined by our president here at FreightWaves, George Abernathy, and we're going to talk about best practices for CRMs and kind of whatever CRM you have, how to optimize that CRM, which is a huge tool and basically is a best practice for everybody out there. And,
right, and then we've got What the Truck on Friday.
What the Truck, and you have a couple really great interviews for What the Truck.
Yeah, we've got Bill Driegert from Uber Freight will be on. He'll be joining us, so that'll be really interesting to have a conversation with him. And then we're a 13-year-old in West Virginia is handing out lunches to drivers, which is it's awesome.
Yeah,
right?
Emily actually interviewed the 13-year-old boy and his father today, and you guys are going to call him on What the Truck and get an update on how that is going. But that's a great handing out free lunches to truck drivers. It's awesome.
It's awesome to
story.
see what's going on, right?
Yeah,
and we really should start covering a little bit more of that type of stuff, how people are coming together, because you read some things that are really heartwarming and kind of, we come together, right? And hopefully those are the type of things that stick after this.
Definitely. And if you want to hear more about economics and catch more of what Andrew and Anthony were talking about, they were on Freightonomics, so you can go download that podcast wherever you download podcasts or FreightWaves TV. And they did a whole hour of kind of going through the economics of the jobless claims that came out this morning and kind of their projections going forward in this COVID-19 or coronavirus crisis. But with that, I think that wraps it up for this special edition. Yep. And catch us every Tuesday and Thursday at 12 p.m. We'll be coming live as long as we're in this crisis to give you the best freight market updates.
Amen. Peace and love.
Peace and love.